Good afternoon. This is Ken Long from Tortoise Capital with a quick case study on turning points midday using the Bollinger Band flow technique, or the PANDA. So what we have here is a screenshot from a ready, fire, aim technique on February 2nd, 2012 using symbol SPY. And this is what we're calling the Bollinger Band frame, so you can see how we're reading the indicators. We have 30-period look back in the Bollinger Bands, looking at +1, 2, and 3, and -1, 2, and 3 Bollinger Bands, indicated by the codes, the midpoint being the dotted line. The solid black line is a 30-period regression line. Blue line is a 10-period regression line. We're going to MACD histogram on the bottom with the parameters of 10, 20, and 8. And so halfway through the day, there had been a nice sell-off in SPY down to the 132.30 level. Finds a local minimum. Price begins to move up. The first thing that happens is a crossover of the blue regression line and the black regression line. MACD histogram starts giving upticks. This is oversold on a 10-period Williams percent R. And so somewhere in this green circle where the regression lines cross, the indicators are suggesting you want to start getting long about here. So the absolute minimum was in the blue circle, and then you want to be long somewhere by the crossover, somewhere in this candle. On counter trend rallies, or the second blue circle here, that indicates the target. We're looking for price to move from an extreme to the midpoint, and then hesitation does not surprise us, and that's what you see here. If it does not fail back to the primary trend, which is down, as you can see from the Bollinger Band mean, it's clearly pointing down. If it doesn't fail here in this blue circle, the next leg up is the far side of the blue band, which is +1 standard deviation. In this case, the example, it fails. The next thing we're looking for is a pullback and hold support at the Bollinger Band. If it holds here and then starts to go up, like it has in this example, what we have here is a lazy W turning point in the market, and especially after a long move down in one direction, it's rare to see a V bottom, and so we would be looking for down, move up to the far side of the blue, pull back, find support vicinity of the mean, and then take off again. And now what you have is a lazy W formed by these blue circles, and then an entry at about the 132.55-ish range, and with a stop below the swing low, you now are in a position where you can take advantage of an intraday reversal. For the rest of the move that day, the price stayed in the green and the pink zone for quite a period. You had plenty of opportunities to reduce your risk, move your stops up, and then take profits as the day drew on. So this is what we're looking for after a morning session, particularly one that was directional. We're looking for a local minimum defined by the candle, and then a crossover point here of the blue crossing black, indication it's about time to get long. You can use a variety of entry techniques here, but then the Bollinger Bands calibrate our expectation of how the price is moving and how we can interpret that. So Bollinger Band flow.